The Federal Reserve has done it again. They've increased interest rates, and everybody is wondering what's going to happen now. Well, I'm going to talk about that today. We're going to go into the details. I'll show you everything that's happened, and I will give you the results of that so that you can make the right decisions, so that you can make the right choices, so that you are empowered and you know everything that has happened up until this point. It is imperative that we understand these details, or else we're going to be left in the dark. So I'll show you that. You came here for the truth, so let me unveil that for you. I wanted to begin by just showing you what happened precisely with the interest rate hike. That is a 1/4 percentage point, 0.25%, as well as the fact that they said they basically are near the end of hiking. Okay, so they are at 5% here right now, the top end, 5%. And that connects in, I always show you the source itself. Federal Reserve issues FOMC statement from the 22nd, and you will see it's at 4.75% to 5%. All right, so it's always within that range, and they could bring it to the bottom of the range, to the top of the range, but anyway, that's where we're at, okay? So they basically said, look, inflation is bad, it's still bad, we need to control it, all of these things. There was nothing new in that sense. Many people had wondered, are they going to increase? Are they not going to increase? I will talk about that in the next video. I think it's important for a lot of people that they understand what's happening, okay? The increases are here, whether it was 4.75 on the top end or 4.75 on the bottom end, ultimately we're around the same level. I'm going to show you something interesting, okay? Stock slide following Fed's rate hike. Dow sheds more than 500 points. So obviously they didn't like it. But there was more to it. It wasn't just Jerome Powell that was speaking. There was another lady that said something that kind of spooked the markets. We'll talk about that in a second. Financial conditions are tightening after SVB's collapse and could slow the economy, according to Jerome Powell. And he says that that's probably by more than the traditional indexes say, because the fear is there. Like, you can't really measure that necessarily. The central bank chief said that tighter financial conditions caused by more stringent lending decisions from banks could have similar impact on further hikes from the Fed. And you are going to see this, there's no question, we already are, in the commercial real estate industry. This is one that's going to be felt right now. Until they cut interest rates and signal that they're going to be going way, way down, I think commercial lending is very precarious right now. So that's the big buildings, that's the big business. That's where they need so much cement and so much copper and so many workers and all these different things. They need a lot on the commercial end. It's not as much as, somebody putting a little extension on their backyard, somebody's, adding a deck in their backyard. These are small projects. Yes, they do add up when you have a lot of people, but look at this on the whole, okay? Big business is big money, big jobs. And if they aren't lending, you don't have that. You don't have that growth there. So that's what we got to pay attention to, okay? Fed caught between inflation and a bank crisis. Central bank confronts the hike or pause choice, and they went for the hike. And they did this at a time in which inflation is still raging higher and higher, right? They're not hiding that. They know that. And you and I see this all the time. Inflation has been going wild just about everywhere. And that affects your rent, your mortgage, like shelter costs. It affects your food costs. It's affecting everything. And ultimately, from the origination of where that thing came from, the raw materials, whether it's food, whether it's something in construction and so on, they're going to try to do their best to increase their prices. What is the market willing to accept? Whether that's B2B, so business to business, or B2C, business to consumer. And they're all trying to, bring it as high as they can. Yes, there's inflation there, the input costs are there, but maybe their input costs are $1 higher per unit, let's say. But maybe the market is willing to accept $2 higher per unit. So they're now able to profit $1 for every $2 they increase. This is okay for them. They're willing to accept that. It's just a matter of how high they can go. And I'm noticing this just about everywhere. Yeah, in the e-commerce industry that I have to deal with, I'm seeing it all the time. And how much is the consumer willing to allow, their disposable income? These are all the things that are dependent on this. And that's why I tell people, I'm going to do an entire video about this, but just hang in there. When you are going to sell a product or service, sell to the people who are needing that product. So not a t-shirt for your cat. Maybe it's something that saves money, time, energy. And that could be, I used the example, but please don't sell this product, Tupperware. Because yes, you're buying Tupperware, but you're saving money long term because you're bringing your lunch to work, let's say. You understand the concept there? That yes, you're buying something, but it saves you money. Those are the type of products that are going to do well today and tomorrow. So keep that in mind. Okay, here we have it. Really good stuff. I got a few things that I pulled from Twitter, and I wanted to show you that. Powell, rate cuts are not in our base case, and that's all I have to say. Powell then literally leaves the conference. Okay, it's just interesting the way that they do this. He had enough. Apparently, he was asked the question several times, and they're saying 2023 not gonna happen. The market, however, not exactly the case. I'll show you that in a second here. In case you missed it, Yellen to blame for US stock slump, not Powell or the Fed. Things got really ugly after Powell left the podium, with stocks accelerating their decline into the closing bell. So it was as soon as Yellen started talking that what I believe was more critical, because whether they increase by 25 basis points, that's not a big impact. But when Yellen said, maybe we're not going to be able to actually cover all depositors, that hit the bank stocks, regional banks, everything starts going tumbling down. The markets follow along with that, and you see it. This is the way it goes. And that's why you can't be overexposed to any one industry. Most people right now are overexposed to tech. But if tech gets regulated, this is the biggest worry, and I've talked about this 100 times. If tech becomes regulated, you're in big trouble if you're overexposed to tech. Definitely. There's no question. And they're pushing for it. Congress is pushing for it, so we'll see what happens. Fed's Powell, officials just don't see rate cuts this year, but the markets strongly disagree. And they're pricing it in already. This year, in 2023, the market has begun pricing in cuts. So they think by mid-year, we're going to start to see cuts. I don't know. I really don't know, but that would be very devastating, in my opinion, for the eventual inflationary fire that they'll create in that. Weight of the two largest stocks in the S&P 500. So imagine Microsoft and Apple now account for 13% of the entire S&P 500. That's huge. In fact, we have not seen the top two stocks account for this since back in the 1980, I think 1980, 1979. That is massive. That is a problem because everything is relying on these two stocks to keep it going. Extremely dangerous, if you ask me. Lagarde vows robust policy with ECB ready to act as needed. And the big one here is underlying inflation shows no evidence of trending down. So what you can take from this is that if you are in Europe or if you're in the US, they are still actively increasing interest rates, at least until this point here. And that means that you have tightening financial conditions and we still have turmoil to be expected. In Canada, they said, no, we're not doing that. We are not doing that. We're going to cut interest rates soon. Don't worry. We're going to go easy because we need those home prices to hit levels that absolutely nobody can afford. That's what they're trying to achieve. But in Europe, they seem to be, basically saying that, hey, we got to get inflation down. We're going to take care of it. And so that's really important. Really important to watch that. I think at some point they're going to be having to turn it around, but at least right now, as of the recording of this video, that's where they're going. And then they also had this up here talking about Cathie Wood. My goodness, the things that this woman says, and they keep bringing her on CNBC, Bloomberg, they just keep bringing her on. This is the type of thing that people don't realize. They're going to get themselves into a trap because they're confused. And that's what these messages are all about. You got to take matters into your own hands. Diversification important. Having income from multiple currencies is important. Even if you take that and then you bring it back to your own currency, it's still wise to have an avenue, a road to go. Like, let's say you always went down to work the exact same street, right? That's fine because that's the shortest route. But if that route had a problem, maybe there was major construction, maybe there's a big accident, you have another route to go around, and you want that. You always want that. And the same thing with your finances. And yet the vast majority of these moron YouTubers out there, they just tell you one thing, and that is so silly. It's so unwise, and I really don't like it. And I shouldn't say those words anyway, in many cases, honestly, it's terrible because they've got millions of subscribers in so many cases, and they're just feeding people garbage, and I feel bad. This is terrible. Anyway, for those interested, you got to sign up to the Money GPS Insiders. It's totally free. It's basically the video of the day. So the first video of the day in the morning, I'm going to email that to you directly. And why? Because number one, most people do not see the videos come through their feed. And also number two is, in case they shut me down, if they completely shut me down, then you're going to be able to have a means of connecting, okay? So what you do is themoneygps.com, scroll down to the bottom, fill in the form, and little anecdote, I got suspended from emailing because they wanted me to write, do you agree to accept these emails? Yes/no. They made me write that in the thing, even though you're signing up, you're putting your email address in there. Anyway, the point is, after getting suspended, after getting that reversed, after like almost a month, it's now back up and running. If you want to join, totally free. I want this because then I can communicate to you directly. Themoneygps.com, scroll down to the bottom, fill in your email address, and I'll send you the video of the day. All right, I'll see you tomorrow. Take care.